Your wallet is about to feel the shockwaves from a country thousands of miles away. And the truth is, most people are looking in the wrong direction. A massive geopolitical shift just started, and it is going to hit your gas prices and the security of the US border faster than you think. You are losing money right now because of a global game of chess that most people do not even know is being played. We are talking about the total collapse and potential rebirth of Venezuela, a country that sits on the largest oil reserves in the world, but has become the single biggest driver of instability in the Western Hemisphere. For 2 decades, this nation has been fueling mass migration and economic distress, and now a shocking announcement about the removal of its leadership has changed everything. But before you think this is just some foreign news story, you need to understand why this matters for your bank account, your taxes, and the price of the steak on your dinner table. Why is this happening? To understand the crisis, we have to look at the 3 primary triggers that are pulling the world into a dangerous phase. First, the power vacuum in Caracas is not just a political problem. It is a liquidity shock to the global energy market. Imagine a giant gas station that used to provide for the entire neighborhood, but the owner has been locked out, and now the neighborhood gangs are fighting over who gets the keys to the pumps. While they fight, the price of gas for everyone else starts to climb because that supply is frozen. Second, the military coalition in Venezuela is splintering. Power in that country has never been about one man. It is a coalition stitched together by access to oil money. Now that the main arbitrator is gone, different factions of the military are scrambling to protect their own interests. Third, the US has issued a massive ultimatum. The White House is demanding a total pivot in energy deals and a complete break from ties with Russia and China. If these demands are not met, the US Naval Task Force is ready to cut off the country's oil exports entirely. What does this mean for you? Think of Venezuela as a massive credit card that has been maxed out by a reckless spend. For years, the country has lost 3/4 of its total economic output. That is like a person who used to earn $100,000 a year, suddenly finding themselves trying to survive on just $25,000, while still having to pay off $1 million in debt. When a country fails that hard, it does not just stay within its borders, it spills over. It creates migration waves that strain the social services and tax systems of every country in the region, including the US. Why should you be worried about the numbers you are hearing in the news? You might have heard that Venezuela has 300 billion barrels of oil. On paper, that makes them richer than Saudi Arabia. But here is the catch that the mainstream media is not telling you. Much of that number is a total mirage. Back in the late 2000s, the state-owned oil company was coerced into tripling its reserve estimates without actually finding any new oil. It was a fake bank balance used to get more leverage in international politics. Even if the oil is there, it is heavy crude, high in sulfur and metallic impurities. Refining it is like trying to turn muddy swamp water into crystal clear drinking water. It is expensive, it is slow, and it crushes the profit margin. This means the cushion everyone thinks is there to save the world economy might actually be empty. If you are not prepared, you are the one who will pay for this transition. There are 3 possible outcomes sitting in front of us right now, and 2 of them lead to a massive spike in global volatility. The first outcome is a managed transition, where elections are held and a new leader emerges. This is the best case scenario, like a company going through a clean bankruptcy and coming out stronger. But the second outcome is more likely cosmetic change. This is where the face of the government changes, but the same corrupt machinery and criminal networks stay in power behind the scenes. The third outcome, and the one that should keep you awake at night, is a violent escalation. This is where the power struggle turns into a street war, and the US is pulled into an open-ended military commitment to protect the region. Think of it like a small kitchen fire that suddenly spreads to the entire house because the neighbors started arguing instead of grabbing the extinguisher. Now, let's talk about how you survive this. You cannot control what happens in Caracas, but you can control how your household reacts to the fallout. Based on the current crisis mechanism, the 2 biggest risks to your finances are energy price volatility and a risk-off market crash. To combat this, we are going to look at two specific survival strategies that have the highest impact today. First, you must implement an energy inflation armor strategy. This is not just about driving less. It is about protecting your purchasing power from a permanent shift in energy costs. The logic is simple. When global oil supply from major players is threatened, the cost of everything that requires transportation goes up. That means your groceries, your Amazon deliveries, and your utility bills. To execute this, you should first audit your monthly recurring energy expenses and identify where you can lock in fixed rates. Second, shift a portion of your liquid savings into assets that have a positive correlation with energy prices, such as diversified energy infrastructure funds. Third, build a 3-month buffer specifically for increased cost of living expenses. A common mistake people make is thinking gas prices will always go back down quickly. In a geopolitical shift, they can stay high for years. Another mistake is ignoring the indirect costs. Remember, when fuel goes up, your grocery bill follows 2 weeks later. Finally, do not wait for the news to confirm a price spike before you act. By then, the market has already priced it in. Think about it this way. If your monthly gas and grocery bill is $1,000 and inflation hits 10% because of an energy shock, you are losing $100 of purchasing power every single month. That is $1,200 a year just gone. By locking in costs and hedging your savings, you turn that loss back into a neutral position. The one rule to remember here is energy is the master resource. If its price changes, the price of everything changes. Second, you need to adopt a tail risk protection strategy for your broader portfolio. We are entering a period where confidence shocks can cause sudden, sharp drawdowns in the stock market. When the world looks unstable, big investors pull their money out of risky assets and move into cash or gold. You should do the same on a smaller scale. First, rebalance your accounts to ensure you have at least 20% in high liquidity cash or short-term US Treasuries. Second, set hard stop losses on any individual stocks that are highly sensitive to global trade. Third, stop all new major debt obligations until the geopolitical dust settles. A common mistake is trying to time the bottom of a crash. You will almost always miss it. Another mistake is panic selling everything at once. You only need to protect the portion of your wealth that you cannot afford to lose in the next 2 years. A third mistake is forgetting that in a crisis, cash is a position, not just a lack of an investment. Imagine you have a $50,000 401k. A 20% market dip takes that down to $40,000. It takes a 25% gain just to get back to where you started. By holding 20% in cash, you reduce your exposure and give yourself the ammunition to buy back in when prices are low. The one rule to remember here is, in a storm, the person with the most dry wood is the one who stays warm. You have to realize that we are at a testing ground for American power and judgment. If the US tries to engineer every outcome in Venezuela, it could lead to another decades-long commitment with rising costs and no exit. But if we walk away, the vacuum will be filled by rivals who do not have our interests at heart. This is a game of musical chairs where the music has already stopped and everyone is lunging for a seat. You need to make sure you have your own seat secured before the chaos spreads. Every technical indicator is flashing red right now. The US dollar index is reacting to global instability, and the S&P 500 is showing signs of exhaustion as it tries to price in these new risks. Historically, we have seen this before. In the periods leading up to major regional conflicts, the markets often stay quiet until the very last second before a massive move. Do not be the person who waits for the explosion to start looking for the exit. To wrap this up, remember that the ordinary economics of this situation is simple instability anywhere eventually hits your pocketbook everywhere. You have seen the causes: the power vacuum, the military splintering, and the US ultimatum. You have seen the analogies: the fake bank balance of oil and the kitchen fire that spreads. And you have the two survival plans: energy inflation armor and tail risk protection. The world is changing fast, and the middle class is the group that always gets hit the hardest because they are the last to know and the last to act. Do not let that be you. Take these steps today, secure your household, and keep your eyes on the real numbers, not the headlines. If this helped, hit like and subscribe.